Tesla stock is, well, red on the day. Matter of fact, the worst day in 2 months. Why? Well, it's because of an analyst downgrade, and what this analyst has to say highlights why these analysts are probably not going to have jobs for too much longer. The points that they point out about Tesla really make no sense at all. We're going to get into it here in this video, as well as what Fed Jerome Powell said today, what to expect tomorrow, and why this Tesla rally is far from over. If you guys like my perspective and you want to stay up to date with everything happening in our markets and take a special interest in Tesla stock, tap, tickle, touch, or smash the like button. Do whatever you want, get funky with it, get jiggy with it, I don't care what you do, but make it turn a different color, and let's dive into it. So before we get into what this analyst has to say about Tesla, which we're gonna call out the BS when we see it, it's complete BS. You actually want to see Tesla red a couple days. You want to see the stock get volatile and trading back and forth, because you want to see the RSI come down. You want to see some of the overbought technicals come back down. That will allow Tesla to retake higher highs of this most recent rally without that kind of overbought narrative on the stock. I like to reference Nvidia here because Nvidia did exactly that. Nvidia had a parabolic rally. If you look at something like the RSI, it got really overbought. And then the stock came down for a couple of days. It really just traded sideways. It didn't come down really at all. But you continued on over 15% higher, and the RSI is still lower than it was when Nvidia was 410. Nvidia currently trades at 431. So I've been very vocal on this. You want to see this volatile trading, really sideways trading, heading into July 2nd. The week of July 2nd, you likely do get a ramp up into the delivery numbers. Typically, that's what happens with Tesla. If delivery numbers come in better than expectations, that's where you ultimately get that short squeeze. Now, I want to break down some of the technicals with you guys here in just a moment, but let's get into what this analyst said about Tesla. Barclays analyst Dan Levy advised Tesla investors to move to the sidelines, explaining the stock's 170% rally over the last 6 months is too rich for his liking. And he goes on to say that Tesla's added $300 billion to its market cap. And he says that there really hasn't been a change in earnings expectations, which, let me push back on that. That's correct. There really hasn't been an increased expectations for better earnings or really better deliveries. Nothing has really changed. This is a crazy concept to a lot of analysts, right? Nothing has changed for any stock in this market. Earnings estimates have not went higher for Apple, for Microsoft, for a lot of your big tech besides Nvidia. Nothing has changed, but multiples have continued to expand. Now, why does it make sense that Tesla is still down a lot more in regards to where the markets are, or to where other big tech names are? The only thing that he can sit here and say is Tesla's had a 170% rally. But why have you seen a 170% rally? Because people were wrong, and Tesla should have never been at $100 per share. That was a false conception of what was happening at the time with Tesla. People thought Tesla was seeing massive demand destruction due to interest rates. That did not materialize. So the same way that this analyst can sit here and say that nothing has changed with Tesla's earnings expectations, right? Well, nothing really changed when the stock dropped. So this rally really hasn't been that much. It really hasn't been that strong, all things considered, right? After all, nothing has really changed recently, for good or for bad, when Tesla was low or when Tesla is higher, as it is right now. But to push back on that even further, I could say and sit here and make an argument that things have changed over the long-term prospects for Tesla's business. These EV charging deals, that's going to add high margin revenue over time. It really solidifies Tesla as the player in charging. This is like the pickaxe and shovel industry of EVs. That is a positive thing in the long term. Something that we just went over yesterday in yesterday's video, this analyst obviously missed. The fact that Tesla is looking to build a factory in India, where India specifically is almost the largest population in the world by country. It has a high concentration of the rarest earth metals that are components of EV vehicles. It has no legacy makers that exist in the country, like on a big scale. You can't name me one Indian car company out there. If you can, let me know down below in the comment section, and let's see if we have heard of this brand before. It's non-existent. Tesla, if they get into India first and really start to establish themselves, not to mention India is a rapidly growing country, that's going to have trillions of dollars of value to be added to Tesla. So if that's coming in the long term, markets are forward looking, so they're pricing that in. Another reason why Tesla stock justifiably is going higher. Now, technically, this Barclays analyst, Dan Levy, actually raised his price target from $220 per share to $260 per share, but he downgraded the stock as a whole from a buy to a hold. And that is a big reason why the stock is kind of selling down today. On top of it, keep in mind the stock has rallied a lot recently, and this is very healthy. I repeat, you wanted to see this happen if you think Tesla is going to reach 300, 350, new all-time highs this year. I've said this in almost every single video. So this does not come as a shocker. Tesla stock down over 3% today. And although Tesla stock is down about 3.5% today, the hedge funds and institutions are taking this opportunity to load up on some bullish options. Today, you have seen 1,800 options trades come through from hedge funds and institutions, totaling $528.43 million. About double what you have seen on any given day recently. Huge dollar amount, with a positive order value of 66%. So a vast majority of these trades are calls, and still hedge funds, institutions are betting that Tesla stock could be 300, 350, 400 plus per share by July/August. So there's a lot of money that is taking bullish bets on Tesla. And if you wanted to play this Tesla rally, today looks like a pretty good day to get into some of those positions. Now, I would caution against that slightly, because we can have a little bit more downside here, and I would actually encourage that downside, and for Tesla stock to trade down to about $250 per share. That is going to be your major level of support. And I'm not going to change this chart because I want to hold myself accountable. I think Tesla could trade down to $250 and find support here. If I'm wrong, I'm wrong. But if that does happen, that's surely going to reset this RSI and get that back into a normal zone. And then you can continue higher from there, break out to 300 plus per share before you start to get that RSI that gets overbought again. And that's ultimately what I expect to happen after July 2nd. Again, if you watch these videos, then this might sound redundant and repetitive, but I'm going to point it out. The markets in August of 2022, just look at the S&P 500. You can look at any other big tech stock you want. You can look at the NASDAQ, doesn't matter. all the charts look the same. This was the August 2022 high. The last time markets were getting excited because maybe the Fed would pause, this was when Jerome Powell went to Jackson Hole and crushed our hopes and dreams. And then the markets fell to new lows about a month later. The high of this rally was right here. Well, markets are still, on a percentage basis, go ahead and pull it up, about 3% higher than those August highs. And other individual stocks are up a lot more than that, right? The NASDAQ is up way more than that. But look at Tesla. Tesla is still down from the August 2022 highs, still down about 16%. So again, to come back at that analyst, buddy, you got it wrong. You're fucking clueless. That's just the facts here. Sure, Tesla could trade sideways, and sure, we encourage that to happen. But this rally is far from over. As long as Tesla does not have terrible delivery numbers July 2nd, all indications that we have gotten are that Tesla's likely to beat the 440,000 vehicle delivery estimate. Now, another technical factor I do want to point out is a pretty obvious one, at least to me, but I do want to make it known so all of you guys know as well. And it's going to be this ascending line of support. This rally has been very textbook in terms of just following this overall trend line, right? The low wicks of every day bounce almost perfectly off this trend line. Well, odds are if you trade sideways tomorrow, you could wick down to this trend line and continue on this path. This is also a line that I will keep here on this chart to see if Tesla does start to really follow this formation even more. But what we've seen so far is this has been a really good way to trade Tesla. Now, we do have some other news coming out today from Fed Jerome Powell. He gave his congressional speech to the Senate Banking Committee. Now, what he said is a lot of the same old things that we have heard before, but a couple things do stick out as a little bit different. Fed Jerome Powell says, quote, "We have a long way to go with the inflation fight. That we're really nowhere near where the Fed's target is." And I think the markets don't respect that enough. How the markets expect the Fed to U-turn just because inflation is going down. We need to see inflation staying down. And that's basically what Fed Jerome Powell reiterated as he was praised for this strong labor market. You got one side of the equation, right, of this dual mandate, low unemployment, but not stable prices. That part not really going as planned. Now, Fed Jerome Powell also said that we shouldn't think of the last Fed meeting as a skip. Now, that can be taken bullishly or it could be taken bearishly, that they have more work to do, in which Fed Jerome Powell, that's what he reiterated, and the markets did sell down when he spoke about a skip. Or it could be taken as maybe they just skip and don't raise rates again. I think the data is obviously going to be the main driver. But again, it was mainly the same old, same old. Another thing that really stuck out to markets that caused a reaction is Powell was asked, does he think that rates will have to stay higher for longer in terms of once inflation gets back to 2%, does Powell think rates will have to stay higher than what we were used to in the past? And he would not give a yes or no definitive answer, but the way that he answered that question was more leaning towards, yeah, they're probably going to have to stay a little bit higher than where they were in the past. That comes down to supply constraints that are ongoing. I mean, they still continue to this day, as well as deglobalization. That is going to have an inflationary effect on the economy. Fed Jerome Powell is also going to be speaking tomorrow as well at the same Senate Banking Committee, although the second day of these testimonies don't really tend to give you market reactions. Markets usually react off of the first day. Anything's possible, and that could be a volatility catalyst. You are also seeing that weekly mortgage demand was flat, even as interest rates dropped for the third straight week. So it looks like this is kind of a good thing for inflation, right? Housing definitely needs to flatten out and stabilize and stop going higher, but it's also a sign that maybe consumers starting to slow down on taking out credit, taking out mortgages, right? Credit cards, things of that nature, and that will ultimately have a negative impact to the country's GDP. Now, tomorrow we are also going to get some economic data. Coming in at 8:30 in the morning, you are going to get initial jobless claims for June 17th. Initial jobless claims. This is a very important piece of data because it's not as backwards looking as the labor reports, right? Reports from the government tend to be 1 to 2 months behind. So you don't really know what's happening currently. You kind of just know what happened 1 or 2 months ago. Initial jobless claims. This can be a more accurate, real-time update of the labor market. And as we can see, if we pull up the weekly jobless claims, I mean, you've jumped higher. Last two reports, you were at 262,000. You were expecting 271,000 this time around. So although you're historically very low, you have started to increase, and you are seeing labor conditions starting to decrease quite a bit. Weekly average hours as well has also been falling. So the net output from workers has actually fallen by quite a bit. So even as we get some of the non-farm payroll reports, for an example, that are showing we created 200,000 plus jobs in a month, the average weekly hours has actually been declining. So those labor reports have not looked that good. Average weekly hours declining might be feeding into initial jobless claims going higher as people do start to apply for temporary unemployment insurance, or people just outright start to get laid off. We are also going to get the Kansas Fed Composite Index, the Kansas Fed Manufacturing Index, as well as some bond auctions that come out as well at about 11 o'clock in the morning tomorrow. So will be pretty important nonetheless data that we do get for tomorrow. Guys, that is it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.